Welcome to our comprehensive guide on online lending platforms. In recent years, the financial landscape has been transformed by the rise of digital technology, making it easier than ever for individuals and businesses to access loans. Online lending platforms have emerged as a convenient alternative to traditional banks, offering quick application processes and often more flexible terms. In this video, we'll explore how these platforms work, their benefits, potential risks, and what you should consider before borrowing. Let's begin by understanding what online lending platforms are and why they've become so popular in today's fast-paced world. Online lending platforms are digital services that connect borrowers with lenders through the internet. Unlike traditional banks, these platforms operate entirely online, streamlining the loan application and approval process. Borrowers can submit their information, receive offers, and manage their loans without ever visiting a physical branch. Lenders, on the other hand, can invest in loans and earn interest, all from the comfort of their own homes. This digital approach has made borrowing and lending more accessible, efficient, and transparent for everyone involved. Lending has come a long way from the days of paperwork and long waits at the bank. With the advent of online lending platforms, the process has become much faster and more user-friendly. These platforms leverage technology to automate credit checks, risk assessments, and even loan disbursements. As a result, borrowers can often get approved within minutes and receive funds directly into their bank accounts. This evolution has opened up new opportunities for people who might have been overlooked by traditional lenders. There are several types of online lending platforms, each catering to different needs. Peer-to-peer P2P lending connects individual borrowers with individual lenders. Marketplace lenders partner with institutional investors to fund loans. Some platforms focus on personal loans, while others specialize in business financing or student loans. Understanding the differences between these platforms can help you choose the right one for your specific situation. Process of borrowing through an online lending platform is straightforward. First, you create an account and fill out an application with your personal and financial details. The platform then uses algorithms to assess your creditworthiness and match you with suitable lenders or loan products. Once approved, you review the terms, accept the offer, and the funds are transferred to your account. Repayment is typically managed through automatic deductions, making the process seamless and hassle-free. Online lending platforms offer several advantages for borrowers. The application process is usually quick and can be completed from anywhere with an internet connection. Many platforms provide instant decisions, and funds can be disbursed within a day or two. Additionally, online lenders may offer more flexible terms and lower interest rates compared to traditional banks, especially for those with good credit. This convenience and accessibility have made online lending a popular choice for many people. Lenders also benefit from online lending platforms. These platforms provide access to a wide range of borrowers, allowing lenders to diversify their investments. The use of technology helps assess risk more accurately, and lenders can track their investments in real time. Additionally, online platforms often handle loan servicing and collections, reducing the administrative burden for individual lenders. This makes it easier for both individuals and institutions to participate in lending. Peer-to-peer P2P lending is a popular form of online lending where individuals lend money directly to other individuals. The platform acts as a facilitator, matching borrowers with lenders and handling the transaction process. P2P lending often results in better rates for both parties, as there are fewer intermediaries involved. However, it's important for both borrowers and lenders to understand the risks, such as defaults or platform failures, before participating. Marketplace lending platforms connect borrowers with institutional investors, such as banks or hedge funds, rather than individual lenders. These platforms can offer larger loan amounts and may have more stringent approval criteria. Marketplace lending is often used for business loans or larger personal loans. The involvement of institutional investors can provide more stability and lower risk for lenders, but borrowers may face higher requirements to qualify. One of the most common uses for online lending platforms is personal loans. These loans can be used for a variety of purposes, such as consolidating debt, covering emergency expenses, or funding a major purchase. Online platforms make it easy to compare offers from multiple lenders, ensuring you get the best terms for your needs. The entire process from application to funding can often be completed in just a few days. For small businesses and entrepreneurs, online lending platforms offer a valuable source of financing. These platforms provide access to working capital, equipment financing, and even lines of credit. The streamlined application process and quick funding can be especially helpful for businesses that need to act fast. Many platforms also offer tools to help businesses manage their loans and track their financial health. Online lending platforms have also entered the student loan market, offering private loans and refinancing options for students and graduates. These platforms often provide competitive rates and flexible repayment plans, making it easier for students to manage their education expenses. The online process simplifies application and approval, helping students focus on their studies rather than paperwork. Applying for a loan through an online platform is designed to be as simple as possible. You'll typically need to provide basic personal information, details about your income and employment, and the amount you wish to borrow. Some platforms may also require supporting documents such as pay stubs or bank statements. Once you submit your application, the platform's algorithms quickly assess your eligibility and present you with loan offers. Online lending platforms use advanced algorithms and data analysis to assess your creditworthiness. They may consider your credit score, income, employment history, and other factors. This automated process allows for faster decisions and can sometimes identify creditworthy borrowers who might be overlooked by traditional banks. Once approved, you'll receive detailed information about your loan terms, including interest rates and repayment schedule. After you accept a loan offer, the funds are typically transferred directly to your bank account. This process can be completed in as little as one business day, depending on the platform and your bank. The speed and convenience of online loan disbursement are major advantages over traditional lending, where you might wait days or even weeks for funds to arrive. Paying your online loan is usually straightforward. Most platforms set up automatic payments from your bank account, ensuring you never miss a due date. Some also offer flexible repayment options such as bi-weekly or monthly payments. You can often manage your loan and track your repayment progress through the platform's website or mobile app, making it easy to stay on top of your finances. Interest rates on online loans can vary widely depending on your credit profile, the loan amount, and the platform. Some platforms charge origination fees or other costs, so it's important to read the fine print before accepting an offer. Comparing multiple offers can help you find the best deal. Always make sure you understand the total cost of borrowing, including any hidden fees. Each online lending platform has its own eligibility criteria. Common requirements include being at least 18 years old, having a valid bank account, and meeting minimum income thresholds. Some platforms are more flexible than others, making it possible for people with less than perfect credit to qualify. It's important to review the requirements before applying to avoid unnecessary credit checks. Security is a top priority for online lending platforms. They use encryption and other advanced technologies to protect your personal and financial information. Always make sure you're using a reputable platform with strong security measures in place. Reading reviews and checking for regulatory compliance can help ensure your data stays safe throughout the lending process. While online lending platforms offer many benefits, there are also risks to consider. These include the possibility of high interest rates, hidden fees, or scams. Some platforms may not be regulated, increasing the risk for borrowers and lenders. It's important to do your research, read the terms carefully, and only use platforms with a solid reputation and transparent practices. Choosing the right online lending platform requires careful consideration. Look for platforms with positive reviews, transparent terms, and strong customer support. Compare interest rates, fees, and eligibility requirements. It's also wise to check if the platform is regulated by financial authorities, which can provide an extra layer of protection for your money and personal data. Before accepting a loan offer, it's crucial to read all the terms and conditions. Pay attention to the interest rate, repayment schedule, fees, and any penalties for late payments. Understanding the fine print can help you avoid surprises down the road and ensure you're making an informed decision about your finances. One of the biggest advantages of online lending is the ability to compare multiple loan offers quickly. Many platforms allow you to see personalized rates from different lenders with a single application. Take the time to compare interest rates, fees, and repayment terms to find the best option for your needs. This can save you money and help you choose a loan that fits your budget. Good customer support is essential when dealing with online lending platforms. Look for platforms that offer multiple ways to get help, such as live chat, email, or phone support. Responsive customer service can make the borrowing process smoother and help resolve any issues that may arise during your loan term. Many online lending platforms now offer mobile apps, making it even easier to apply for loans and manage your account on the go. These apps often include features like loan calculators, payment reminders, and real-time notifications. With a mobile app, you can stay connected to your finances wherever you are, ensuring you never miss an important update. Key feature of online lending platforms is automated decision-making. Algorithms analyze your application and credit data to determine your eligibility and set loan terms. This reduces human bias and speeds up the approval process. However, it's important to understand how these algorithms work and what factors they consider, as this can affect your chances of approval and the rates you're offered. Transparency is a hallmark of reputable online lending platforms. They provide clear information about interest rates, fees, and repayment terms up front. This allows borrowers to make informed decisions and compare offers easily. Always look for platforms that are open about their terms and willing to answer your questions before you commit to a loan. Regulation is an important aspect of online lending. Many countries have introduced rules to protect borrowers and ensure fair practices. Reputable platforms comply with these regulations and are often registered with financial authorities. Before borrowing, check if the platform is regulated in your country, as this can provide added security and recourse in case of disputes. If a borrower fails to repay their loan, online platforms have procedures in place to handle defaults. This may include late fees, reporting to credit bureaus, or engaging collection agencies. For lenders, platforms may offer some protection through reserve funds or insurance, but there's always a risk of loss. Understanding the platform's default and collection policies is crucial before participating. Borrowing from an online lending platform can affect your credit score. Timely repayments can help build your credit, while missed payments or defaults can lower your score. Some platforms report to major credit bureaus, so it's important to manage your loan responsibly. Always check whether the platform reports to credit agencies before applying. Many online lending platforms offer protections for borrowers, such as clear disclosures, dispute resolution processes, and privacy safeguards. Some also provide educational resources to help borrowers make informed decisions. These protections are designed to create a safer and more transparent borrowing environment for everyone involved. Lenders are also protected by various measures on online platforms. These may include risk assessment tools, reserve funds, and insurance options. Platforms often provide detailed information about borrower profiles and loan performance, helping lenders make informed decisions. However, it's important to remember that all investments carry some level of risk. Online lending platforms are not limited by borders. Many operate internationally, allowing borrowers and lenders from different countries to participate. This global reach can provide more opportunities, but it also introduces additional risks such as currency fluctuations and varying regulations. Always research the platform's international policies before getting involved. Success of online lending platforms relies heavily on technology. From secure data storage to advanced algorithms for credit assessment, technology enables faster, safer, and more efficient lending. Many platforms use artificial intelligence and machine learning to improve their services and reduce risk. Staying up to date with technological advancements is key for both borrowers and lenders. Data plays a crucial role in online lending. Platforms collect and analyze vast amounts of information to assess risk, set interest rates, and match borrowers with lenders. This data-driven approach can lead to more accurate lending decisions and better outcomes for everyone. However, it also raises questions about privacy and data security, making it important to choose platforms that handle your information responsibly. The online lending industry is constantly evolving. New trends include the use of blockchain technology, alternative credit scoring methods, and increased focus on financial inclusion. These innovations aim to make lending more secure, accessible, and fair for all participants. Keeping an eye on emerging trends can help you take advantage of new opportunities in the digital lending space. One of the most significant impacts of online lending platforms is increased financial inclusion. By leveraging technology, these platforms can serve people who are underserved by traditional banks, such as those with limited credit history or living in remote areas. This helps more people access the funds they need to improve their lives and pursue new opportunities. Borrowing money online is convenient, but it's important to do so responsibly. Only borrow what you can afford to repay and make sure you understand all the terms before accepting a loan. Responsible borrowing helps you avoid debt problems and build a positive credit history for the future. If you're new to online lending, start by researching different platforms and reading reviews from other users. Compare loan offers carefully and don't rush into a decision. Make sure you understand the repayment schedule and total cost of the loan. Taking these steps can help you avoid common pitfalls and make the most of your online borrowing experience. For those interested in lending through online platforms, it's important to diversify your investments and understand the risks involved. Use the platform's tools to assess borrower profiles and loan performance. Stay informed about the platform's policies and any changes in regulations that may affect your investments. Let's look at a real-life example of someone who benefited from an online lending platform. Jane, a small business owner, needed funds to expand her shop. Traditional banks turned her down, but an online platform approved her loan within days. With the new capital, Jane grew her business and repaid the loan on time, improving her credit score and opening doors to future opportunities. Now, consider Tom, who borrowed more than he could afford to repay. He missed several payments, leading to late fees and a lower credit score. Tom's experience highlights the importance of borrowing responsibly and understanding the terms of your loan. Learning from others' mistakes can help you avoid similar problems. Future of online lending looks bright, with continued innovation and growth on the horizon. Advances in technology such as artificial intelligence and blockchain promise to make lending even more efficient and secure. As more people embrace digital financial services, online lending platforms are set to play an increasingly important role in the global economy. To sum up, online lending platforms have revolutionized the way we borrow and lend money. They offer speed, convenience, and accessibility, but also come with risks that require careful consideration. By understanding how these platforms work and following best practices, you can make informed decisions and benefit from the opportunities they provide. Thank you for joining us on this journey through the world of online lending platforms. As technology continues to evolve, these platforms will become even more integral to our financial lives. Whether you're a borrower or a lender, staying informed and making responsible choices is key to success in the digital lending space. We hope this guide has provided valuable insights and helps you navigate your financial future with confidence.